Good morning, you all. I haven't been online a few days because I had some things to do, but here we are again, live streaming GU, and let's see what's happening on the charts. You can see on the background, let me check it. You can see that we have a new background. So it means I moved my office, I was moving things in my house, and yeah, it's wonderful. New setup, everything arranged, and let's dive into this. See if we can make some money. Last week wasn't so fruitful, only made 0.62% profit, but was in the end it was okay. You know, better positive than negative numbers is what I say. But let's dive into this. Let me first put the auto. Let me put this back on. On the weekly, we can clearly see last week's candle. You can see this candle here was very bullish. So we are expecting price to mitigate into the buy side liquidity, and then because you can see on the long term it's been a relatively accumulating, you know, it's more sideways that we're trading on the weekly. Yeah, it's time that we go here now in an accumulation zone. We're going now back into the buy side. It's not a fun market. It's since 2022, it's sideways, but this is what we do, and that's how we trade, you know. If it's sideways, then we look for scalps. Either way, we're gonna make money, we're gonna make profits. But on the daily, you see, we are moving up, and you could say that we have a bullish market structure shift here when this candle, it's a break of candle. When this candle breaks above this high on the daily last week, then you can clearly see that we are pushing up. But in the lower ends of the move, we don't have any day one. Day one is what I call that, D1 fair value gaps. We only have a push up. We're breaking the swing high here, so we can state that we are bullish. I kept scalping for shorts last week, and it worked out in the end. With the 0.6, I'm still doing well, up 4% for the month, and we still have a week to make 1-2% more. That would be awesome. But you see, we are still inside this bearish fair value gap here. You have the order block. This is the order block. Then we have the fair value gap, and we traded above. Now, the move started here. So if we're gonna watch or see with a FIB what is happening here, then we can see that we are looking to get into this golden zone, and I'm pretty sure we're gonna have a reaction there. I'll probably guess somewhere about the upper end, because we have the breaker here. We have this confluence. This is the last bullish breaker. You have the top of the golden box, and there are fair value gaps. So I expect us to do something like this. This move already happened. So I'm expecting something like this, and then going back after here, then going back after. But that's a long road from where we are right now, so let's not look too far in the future. Today the mission is of course to scalp some pips out of the market, and I got actually online because I'm thinking that we could see a play out that I've seen happen a lot, and I wanted to catalog that on my YouTube channel in my lives to later study my own behavior and share it with the people who want to watch it later, of course. Now if we go check on the hourly chart, we can clearly see we have a new week opening gap here formed yesterday. This is gonna act as a magnet for price to come back to, and the move that's been happening now, we can see there is a fair value gap just below above the 50%. So what am I expecting? That price is gonna go up a little bit more, and it's gonna give us a fair value gap in this area. And let me change the color of here because I need to see what I'm doing with the wicks. So we want a fair value gap below the 50%. So that's why I think we're still gonna see a little more upside for the morning session. But this fair value gap, if you check the fib on the candle itself, then you can see, let me put this on, let's put this aside and let's put this on top of the candle. You can see this fair value gap in this candle is definitely a beautiful spot to push it higher, but because I'm a scalper, I'm looking of course to capture the retrace, and that's why I'm looking now into candle patterns. This is the PDH, or also known as previous day high, but this is last week's Friday high. So when you can see we had a candle close above, what also is a bullish signature, but it gives us the time to dive back from this high into the fair value gap here. You're gonna see we're live, and the thing that I'm waiting for actually is I don't want to sell here in this accumulation. No, I am looking to go short here. And now I'm gonna put this off that we can watch closer. You see these pink lines. Let me change this in another color just that it's a little clearer. You see these pink lines, I use those as inverted fair value gaps. This would be a good buy zone, and we have a good buy zone here too, but 90% of my trades are shorts, and I'm gonna keep it like that. So there we are again. So yeah, I'm still smoking. I don't know if YouTube allows that in front of the camera, so it's a stressful life trading. No, it's not. It's beautiful. Now you see what I meant? We getting the reaction here. We have a lower low. Wait, let me put this screen back on. So what are we gonna see now? The best move is gonna be up, and you see we had an, let me put this on the 15 again, we have an Asian accumulation here. This was our manipulation A, M, this is the M move, the manipulation move here in, come on, move that, okay. This is the manipulation that happened, took this fair value gap and shot up. And I was a little too late this morning, I had other things to do, so couldn't capitalize on this move. And when I got to the charts, price was already above here, and then I'm looking like, oh, if we get a retrace here going down, then I want to be in the short. So for now I'm just patiently waiting, of course, because I want to see what price is gonna do. But I expect, actually, this is an accumulation. This was the manipulation, taking out the Asian lows, going after the highs, and I'm not sure, but it feels like we're gonna see a New York open at in a few hours. Here at 2:30, I'm gonna be watching the kill zone closely. I think we're gonna see a mitigation of some bearish fair value gaps, and we're gonna see a nice retrace. So I'm looking for 15, maybe 20 pips moves today. Not that much. I'm not a fame trader. I'm not an ego trader. I'm in the market to make money, and I only have this YouTube, especially for myself. Then I have proof of my capabilities, that I can read the market live. And if people want to watch me trade, beautiful. If they don't, I don't give a flying duck. It's for me that I'm doing this. So it keeps me accountable for my trading behavior, and I trade less, or less over trading, better risk management, and yeah. Now this is something I want to show you guys. I don't know, wait, we have to, because you see, this was what trend line traders, this is a trend line, but you see we broke below this trend line, and that's for me reasonably a bearish first signature. But you also see this was an order block with a bullish fair value gap. We taken this morning, we taken the liquidity out, and we're pushing up. But you see, we always have retraces, a retrace move, a retrace move, a retrace move, look, retrace move. So that's what I like to capitalize on. And you see this, let me make it bigger, this fair value gap here in the new week opening gap. This is where we opened yesterday with a gap into the chart. So between the high and the low here, there was a difference in opinion of price. And like I say, I see price coming back into here. Maybe not today, but I'm aiming for today. So I'm gonna be looking to short here around 25 to 100 would be perfect, and even better, of course. Let me move this back again. Even better would be at the bottom here, the orange line is the golden box. You see how many fair value gaps we have in the golden box. We definitely gonna tap into that liquidity this week. So is it better to look for longs? Yeah, but we all trade how we trade, and I'm a counter trend trader. I know that it's highly high risk, but I also know what results it brings me. And look, we have to, because it's, come on, give us the chart. You see, price is losing volatility here already, so it's gonna go to a new level. Probably because you see, this is where I would short, just get a test at a 25 157 somewhere. This would be for me a place to push the button and go short, because there's another inverse fair value gap above that can push price back to break even, so it mitigates a bit of the risk and it gives us a second point of entry to put more lots in, or a higher, or trade on a higher lot size, which if we get a reaction from there, we get quicker to our 10-15 pip moves, and our break even point is quicker reached, so we can have here a good price, have an even better price higher, then drop down, trade in break even, take the worst position out and let the good position run, and trail our stop. If price wants to go against us in a situation like that, then it is what it is. We take a small loss from maybe 1%, maybe 1.5%, and that's okay. Like Friday, I took a 2.9% loss at London Open at 10 a.m. with 30 lots. Yeah, that hurts, of course. That's over $3,000 in less than 20 minutes, boom, gone. But in the afternoon session, I saw a nice setup at, it was at 1 p.m. sorry. I saw the candle pattern. It's like a standard move in my textbook, and I'm like, yup, this is where I'm getting in. So I sold 20 lots short. It made a 14 pip move profit. With 20 lots was around 2,800 I made back. So my day was in close to break even percentage wise, and the week was relatively good. If I didn't act, then I would have gone scared, you know, like analysis paralysis, fear of trading, fear of executing. Then yeah, it happens, you know, can happen to the best trader, but you have to get over it quickly, learn quickly from your mistakes. And I want to quickly show you this one. You see here on this chart, this wick is trading back into this point here on the breaker. So we might see a smaller retrace into the new week opening gap here and push higher. So let's be careful and let's stick to the plan. We don't do stupid stuff, you know, that price is saying like, yeah, I'm going down, look, reject, but we still have this fair value gap here. And there is no market structure shift. And this looks like a first shoulder instead of like a head. So we can expect some moves up. So instead, let's go and see what happens. Can we find the space to go long? Maybe I will for this time. Depends on what the market shows. Because I'm still looking for some money. Still want to make a few more percentages profit this week. Daddy's got bills to pay. The market is unlimited supply of funds. So let's watch what the market wants to provide us with. And let's keep watching the screen while I hide behind the yellow paper. You know what that means? It means like smoking hot time. So let's keep on watching, let's keep tape reading, see what happens. You know, the thing is, you can see this move up. This point here for me is a crucial point where I think price could come back to. And if we could capitalize on this drop, that would be great. But you can see, yeah, we have a head, we have a shoulder, but there is no real displacement. And like always, what is price doing? It's showing like, yeah, higher high. But this is actually again a consolidation and accumulation zone, what I call the trader's manipulation zone. If you don't control your emotions here and you get caught here in the war, then 9 out of 10 you're in a shitty position, and it's like spending time in limbo. None of us likes to be in limbo, so let's see what we can do. And I want to show you this. Let me go to the 5-minute chart and take some things off. Like if you see the fair value gaps that are already below the 50%, then we have none. If we're gonna see here, the last swing low point would be this here. So if we would measure from here, then we could see that this fair value gap now is qualified as a point where price should go higher. And we also have the confluence of the trend line. I don't like to use the trend line really as a confluence, but it sometimes works, sometimes doesn't. We also have the new week opening gap here, and the fair value gap is inside the new week opening gap. So this is definitely a point where we could go long, and you see it's just above the golden box. So if we would get a tap in here, this could be, let's say, this could be a good long position because you're buying near the candle open. And if price comes back to the candle open, it takes out a lot of liquidity always. So for me, this would be a buying point, but I'm a little curious to see what the market wants to do with this fair value gap. Are we gonna leave that behind, or are we gonna use that as a second point of entry? Because you know how I operate is I would dare to buy here. You see, I'm making it bigger that you see it. I would dare to buy here at the bottom of this fair value gap and expect a reaction. And then you have the YouTube and Twitter traders that say, oh, you can't add to a losing trade because if price drops here, then you are actually in a negative PNL. And then there's many pros saying like, you can't add to a losing trade, and I'll be putting in this fair value gap, I'll be putting some more lots in. Why? Because if you have this position and that position, the average price is here, and if you see it crash down, then we probably close the trade. If we have a 5-minute candle close below this fair value gap, then we probably close the trade around here, and yeah, we take the loss from this position and this position. But if we are right and price does something like this, you know, like always, and then gives us a higher high, then we have another position where we can buy on. We already bought here. Then we have another position where we can put in more contracts here, And if we get a fair value gap here, we can add even more positions here. So then it becomes a well-filled trade where we have two very good positions, one a luxury position and one position just to add to a winning position, what I always consider as good, because we have then the confirmation that we make in a higher high again, higher low, another higher high, so this is gonna be a higher low normally. And if you have a fair value gap here around the breaker, then it's like all confluence on top of confluence. It's a no-brainer to buy more here and add to your winning. But this is what many of the YouTube and Twitter coaches that live from coaching instead of from trading will tell you, oh, you can't do that, it's dangerous, you can only risk 1% of your account. I'm putting in like 4, 5, 7% sometimes, and I don't care. The only thing we have to see with the funded accounts is that we don't pass the 5% daily loss limit rule. So if we take a trade here, let's say it goes down 1%, 1.5%, you buy more and it keeps going down and you're 2.5% down, 3% down, and you're convinced that the trade is wrong, you just close the trade and you call it a day, wait 24 hours to trade. Maybe if you get a scalp and you still have like 1.7, 2.7% available for the day and you see another good position, I would just do the same. This is trading. It's like we're professional, I can't say that, but we're professional gamblers, you know. You're never sure. It's always like making decisions based on technical information that we've seen happen in the past, and we react on our intuition and in combination with the rules and setups that we use and study. So if you see something happen that you know that you already seen happen and you have I've seen this before, then I'm just clicking the mouse and getting in and doing what needs to be done. Like, if people don't agree with that behavior, then yeah, that's up to them. I'm a trader. I'm not here to sell you guys coaching, and I'm here to make money out of the market. So, and you see, this is a beautiful shoulder. The only problem here is this is the first 15-minute retrace that we have, and I've seen that go wrong so many times to go short that I'm not pushing any buttons to go short here on this shoulder, not even for this retrace, because that could pay the day, and it could, but there's not enough confluences. And you see it's an accumulation zone. Monday morning London session, if you have the accumulation here, you have the manipulation, and you see this move happen and it's already here. When you come to the market, then you just accept that you missed a good move and you move on to looking for the next move. But let's see. What are we seeing? Are we gonna go short, or are we gonna capture this one here? Let me prepare. 24,600, 24, so we're putting 24,400. And I always put my stop way too big. It's a protection point that I want to use, a point where if price moves against me, I'll close my trade manually and I'll write in my journal, I admit I was wrong, and I become a better trader. It's the 4 fears of Mark Douglas. I strongly suggest that anybody that wants to get into the market buy the books. It's called The Disciplined Trader of Mark Douglas. Definitely a good one to read. Learn to work with your 4 fears, and if you get good at it and you learn to analyze your own fears, you can use them even in your benefit. But you have to be honest with yourself, and I know many people have problems there. So that's why they sell coaching instead of trading high lots. Hertz, high-end rollers, trading zone. We don't give a flying duck about admitting that we were wrong in a setup. Like yesterday I took a trade on Saturday night. Let me show you quickly, guys. I took a trade on XRP. I took the short. Come on. Rewrote, reconnect. I went short here. Come on, show us the charts. Come on. Getting a little slow, this old mother computer. So I saw this move happen Saturday in the weekend, and I decided to sell short here. So I took a short, I took a short position here somewhere, and I got out here because I was wrong. My TP that I put on was at 270, so that was even lower than this here. Let me go to the complete chart. We're still watching the big one. So I had my original TP here at the purple line at 270 and something, and my protection point was above the golden box here. And yesterday evening I saw this happen. Price starts falling down perfectly like expected, and what do? I get out somewhere here. I was trading my account because I was in a big drawdown on my Bybit account. So this move I capitalized somewhere here. I got out, and then you see overnight price drops. Even I would have had my account in a nice net positive. So I'm just telling you, am I the perfect trader? No. Do I make a lot of mistakes? Yes. Am I net profitable? Yes. Am I a good trader? I think so, because I know how to call moves, and I took profit, so I'm not gonna be angry either. But I could have taken way more by be patient. But yeah, you see, it was 2 in the morning here. I had to go to bed, so I couldn't really watch the trade, and I didn't want to see it fly up again and take my stop loss out. So I just took profits. Would have been better to trail the stop into positive, into net positive, and just let God decide what happens. But I was tired, so that's my excuse, and I know it's a shitty excuse. And I was wrong to take profits, but in the end my account is back into almost into break even, so it wasn't a bad move either. And as traders, we're continuously learning, not only from our mistakes but also from our winners. And it was a winning trade, and I learned that my winning trades, and I've been seeing that the last weeks a lot, and even my trading buddy told me, like, Davey, your winning trades run way longer than you let them. Leave one runner. So that's what we're gonna work on. We always have work points, and that's gonna be one of my working points for the next weeks, months. get into a scalp, take profit, put a stop in break even and let one position run. So yeah, let me quickly take a bathroom break and I'll be back, or no, let's call the session, because how much time have we left? Let's see, 18 minutes ago, about. Not gonna trade this. So if there's a setup in the afternoon, you guys see me again. I'm gonna go off now, and thanks for watching. Like I said, if I'm in a trade, I'll show it, and enjoy your lunch.